estate needs. 805-4653 or log on to nagarajhomes.com.
Hello everyone, welcome back to the Real Estate Show. I'm your host Nagaraj Annaiah, your Bay Area Realtor, investor and the guy who brings you a real talk about real estate, wealth building and everything in between. Today we are diving into a topic that affects every single one of us, taxes. But don't worry, this is not going to be your local typical boring tax talk. We are about to uncover 5 powerful tax hacks you can actually use in 2025. And I brought in the expert to break it all down. Joining me today are the CPA Dude, the Elder. This guy is not only a seasoned CPA, but they specialize in helping real estate professionals, investors, and business owners keep more of what they earn. Hi, Elder. Welcome to the show. I'm super
Hi,
excited
Nagaraj.
to have you here.
Hi, Nagaraj. Thank you very much. Excited to be here as well.
Listeners, we are live on Body 92.3. Don't miss out. If you have any questions on your tax filings or any questions on your how to build your wealth, anything on the real estate, this is the show you never need to miss out. And you can give us a call. Any questions, it can be a simple question, bigger question, anything it can be. You can give us a call. Our studio line numbers are 877 Bali 92, 877 Bali 92. Elder, let's talk about, like you said, the best tax strategy ever is a real estate. Can you break down for our listeners how owning a rental property can generate paper losses and actually save them thousands in taxes?
Definitely, yeah. So the unique part about real estate is that you can be cash flow positive, meaning that you can actually bring in money every single month, but appear at a loss for tax purposes. Why? Because some of your expenses will be non-cash expenses. So, for example, if you buy a property, you will have the biggest expense would be depreciation. Depreciation is a non-cash expense. You're not actually paying that. However, the depreciation may be so big that it'll actually put you in a loss for tax purposes.
Okay. So, listeners, we are live on Body 92.3. Myself, Realtor Nagaraj Annaiah, and I'm talking to Elder from the CPA Dude. Would you like to save more on your taxes? Would you like to understand how to save, how to grow your wealth? Then you can give us a call. Our studio line numbers are 877 Bali 92. Elder, like now let's talk about a cost segregation and a bonus depreciation quickly. What is it and how does it help on an average investor with a W-2 income?
Definitely, yeah. So, for example, if you're a W-2 income person, you can buy a property and treat it as a short-term rental. You can put it up on Airbnb or VRBO and rent it out to guests. You can then also trigger bonus depreciation or accelerated depreciation. This depreciation speeds up a lot of the depreciation that you take over the lifetime of the asset, and you
Mhm.
take it all in year one.
Mhm.
And this will generally offset your taxes by quite a bit if you're taking out an oversized chunk in year one.
So basically, see, a lot of people say bonus depreciation can't be done if both are on a W-2 income. So it will, how does that work, like the bonus depreciation? Both.
Definitely, yeah. So if you guys are both on W-2 income, you would need to qualify for the short-term rental loophole. So a
Okay.
short-term rental loophole would involve buying a rental property or renting out your own primary home.
Mhm.
You would need the average stay of your guests to be 7 days or less. So
Uh-huh.
you count up all your guests, how many days they stayed,
Mhm.
7 days or less. You got to do 100 hours of work on the property. As
Uh-huh.
soon as you meet those two criteria, you're eligible for bonus depreciation.
Okay, let's talk about more on that. Let's assume somebody goes and buys an investment property today. Okay. And will they need to rent out starting from April to a December for a short-term rentals, or like how does that work?
Definitely, yeah. So you take the benefit in the year you began the rental activity. So
Uh-huh.
as long as you have rental activity sometime this year, you
Mhm.
will qualify for the short-term rental loophole. However, it's important for you to maintain it as a short-term rental for at least a full 12 months. So if you begin April 1st, 2025,
Mhm.
important that you maintain it for at least a full 12 months, so April 1st, 2026.
Got it. So basically, you can't switch to full long-term rentals for a 3 months and then go back to short-term rentals again. No, that's not possible.
Correct. That is not possible. We need to maintain it as a short-term rental. So I mean, if a guest does stay a month, it's totally fine. But
Uh-huh.
you gotta balance it out with shorter stays because
Uh-huh.
you're really shooting for that 7 day or less average stay.
Okay. Now, what about the multiplexes? Because a lot of right now multiplexes are a good buy, right? Especially on the price perspective. How can that multiplexes work? Like one unit they can stay, and one unit they can use it for a short-term rentals, or unit they can give it for full rent, and the second unit can be an Airbnb.
Yep, no, that's exactly right. So I mean, let's say you're buying a multifamily home.
Mhm.
Let's say you're buying a quadplex, a 4 unit property. You know, you can put a very low down payment, 3.5, 10% for your primary home, and then you can rent out the other 3 units. They can be midterm, long-term, or short-term. However, if they are short-term rentals, you will qualify for the short-term rental loophole, and that will help you save a ton of money in the first year.
Got it. Listeners, myself, Realtor Nagaraj Annaiah, and I'm talking to Elder from CPA Dude, the CPA Dude. We are discussing about the way to build your wealth. What are the ways you can do it? If you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92. So, Elder, going back, right? Like it's still the short-term rental loophole still viable in 2025 for high-income professionals looking for a tax deductions?
Of course. I mean, as long as you buy a property before the end of the year and have at least one renter in the door, you will qualify. So, I mean, we're currently at the end of March, so you still have a full 9 months to go out there and find a property that you would treat as a short-term rental.
Got it. Okay, now let's change my topic to a business ownership, right? Which is a tax superpower. Why is owning a business such a game changer when it comes to a taxes? And how does that apply even to a realtors or a part-time investors? Like, let's talk about a part-time investors wise.
Definitely, yeah. So, I mean, if you own a business, you will
Mhm.
qualify for the same loopholes and strategies that any other business or corporation out there has. You know, the tax code really favors real estate investors and business owners. It does
Okay.
not favor W-2 workers. That's why people in the W-2 world pay the highest tax rate. But if you're in real estate or if you're in business, you pay a much lower tax rate. You can write off your home, your car, you can pay your kids, you can pay family members. You can have your own retirement accounts. You can really structure your business the way you want to really maximize the tax advantages.
Yeah, listeners, like, see, if one in an H-1B and second, the spouse or a like other one is on the H-4 EADs, right? So you can certainly use as a business as a game changer, right? Like instead of both running on a W-2, which can make a basically biggest asset for you. And if you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92. Myself, Realtor Nagaraj Annaiah, and I'm talking to Elder from the CPA Dude. So coming back, like what is the biggest mistake people make when trying to deduct a business related home expenses?
Biggest mistake they make when they do what?
Home expenses, but like especially when home expenses, right? When they're deducting for business related home expenses, what their biggest mistake they're trying to make?
Definitely, yeah. So I think a lot of people that have a business aren't aware of the Augusta rule. So for
Uh-huh.
example, if you have an S corp, you can actually take advantage of the Augusta rule where you rent out your own home to your own company. This generally provides a much greater oversized deduction than the home office would. So I think if you have an S corp, definitely take advantage of the Augusta rule.
Yeah. So, listeners, if you want to set up a business and would like to understand how it goes to help you out, and are you on a H-1B and you're paying a lot of taxes, and your tax seasons is like almost there, the tax in April. So, if you have any questions about that, also you can give us a call. We have Elder from the CPA Dude, and we are discussing about the best tax hacks for 2025. Our studio line numbers for Bolly 92.3 is 877 Bolly 92. Now, talk about the retirement plans because it's a retirement plans on a steroids, right? Like, what's the difference between a defined contribution versus a defined benefit plans, and which should business owners prioritize?
Definitely, yeah. So, I mean, we usually tell business owners to open up a solo 401k, which I
Mhm.
think is a defined contributions plan. A solo 401k for a business owner is a very, very high limit. For 2025, it's up to $70,000. So if you're an S Corp owner, or even an LLC owner, you can potentially put away up to $70,000 into your 401k and defer all that tax entirely.
Wow. So for a high income self-employed, right, how much can they actually differ in taxes using a defined benefit plan?
Up to 70,000.
Up to 70,000. Wow. So see, I think 401k, one of the challenges what I've seen, right? A lot of folks, especially high earning W2 incomes, right? They don't know how to invest, especially in the fidelity account. So basically they just go distribute most of the times. Do you have any suggestions for them on the investing wise on the 401k?
Definitely, yeah. So usually the default for most companies would be a target age date. For example, like retirement 2050, retirement 2055, right? Basically, when do you think you're going to retire? Those funds, I guess, are good for people that are kind of they're not really sure, what to do, where to invest in. However, those funds usually have very, very high fees. So the fees are actually baked into the return. You don't notice that you're paying the fee because it's actually reduced from your actual return. Me personally, I invest a lot in the S&P 500. So if you find a good index fund, S&P 500 can't really beat that. So I
Yeah.
think if you're starting out and you have a 401k, that is probably the best place to keep your money.
Yeah. So when we're talking about the businesses, I have one question. So I've heard the biggest millionaires are like the super rich millionaires. They start a business every 2 years for a tax saving strategies. Is that correct?
So that is the IRS does allow 2 years of tax losses for businesses. So if you do want to start a business and you lose money for the first 2 years, totally fine. The IRS is okay with it. A new business will generally lose money. However, if you lose money for more than 3 years, they may claw back the losses and say that you don't have a business, you have a hobby. So if
Yeah.
you are starting a business, make sure that you do want to make a profit eventually. However, your first 2 years can be at a loss.
But what about the
And
multiple businesses every 2 years?
so, yes, you definitely can do that, but the loss is limited, right? The loss is limited. So if you're single, the limit is almost $300,000. If you're married, it's almost $600,000. So it's not like you can write off, everything, but it is definitely a good chunk.
Yeah. Listeners, don't go anywhere. We'll come back quickly. We'll take a quick break.
I told you, we have to buy our dream house.
अरे डोंट वरी
तुम कुछ कर भी तो नहीं रहे हो.
मैं क्यों ही कुछ करूं जब नागराज अनैया is a perfect real estate matchmaker. He is realtor plus mortgage consultant.
Meet Nagaraj Annaiah, India's most trusted realtor. इनके पास है local expertise and best location. You can find the right home at the right price. Don't wait any longer. Visit nagarajhomes.com or call 858-880-4577. Nagaraj Annaiah, turning your dream home into reality.
Yes, don't worry. I'm there for you. Anything on your real estate investments or anything on your building wealth. Nagaraj Annaiah is for you. There always so that you can grow. When you grow, you can always buy anything on the real estate. So today, I've joined with Eldar from the CPA Dude who can help you out on the tax saving strategies. Don't worry about that. So Eldar, now changing the gears quickly. So triple tax win, HSAs, right? You called HSA as a triple threat always, right? Why is an HSA better than a traditional IRA or even a Roth in some situations?
Definitely, yeah. So an HSA is essentially a Roth on steroids. In a Roth account, your contributions are non-deductible. So if you put money into a Roth, that money is not deducted. You're paying tax on that money today. However, if you max out your HSA in 2025, that cash is fully deductible. You can then invest it. So you can invest it into an ETF, same as you would at a Roth account, and then that account will grow tax-free. And then anytime you need any medical bills, you can then cash it out of your HSA. However, most advisors would tell you to actually not use your HSA when you're young. So pay out of pocket, keep those receipts, let the money in the account grow tax-free like you would in a Roth. And then in 20, 30 years when you actually do retire, that's when you pull out all those old receipts and start taking out all of that money. There's no limit to when you can use the HSA. So if you incur an expense in 2025, you can pull that money out in 2050.
Wow. So, listeners, if you have any questions on this, on HSAs, about your tax saving, on anything on the buying and selling of the real estate, you can give us a call. Our studio line numbers are 877 Bali 92. Myself, Realtor Nagaraj Annaiah, and I'm talking to Eldar from the CPA Dude. Any questions on the real estate tax saving strategies, you're more than welcome. Don't worry about it. When it's a simple question, you can give us a call. So, Eldar, I think we were discussing about earlier before the start of the show how the home prices are going up so crazily right now, right? Like even other parts of USA, forget it, but Bay Area is a different world altogether. So, what might be the contributing factors based on your experience going around?
Well, I mean, I think AI has a lot to do with it, right? AI is super, super hot. There's a lot of money currently in the industry, and I think that's really boosting up the Bay Area. So you're seeing a lot of people make a lot of money on RSUs, especially those that started, 2 to 3 years ago, and now they're cashing out those RSUs and buying their McMansions.
Yeah, I think that's well said. I think a lot of folks might be seeing some depreciation on the stocks wise, right? In that case, because stocks are not always guaranteed to go up. In that case, if they want to diversify the portfolio, right? So the real estate investment is one of the best strategies. If you compare this like the way the depreciation works, and if you use it, talk to the experts like you, then basically it really works out a lot better when diversifying the portfolio.
Totally, totally. I would never recommend anyone to keep RSU stocks. It's very, very dangerous game to play. So, for example, in 2020, I joined Square, which is now called Block. The stock price was $40. It went up all the way to 250, and then it dropped all the way down to 50 again. So it was a wild roller coaster, right? So if you held that stock throughout the entire time you were at the company, you would have lost a ton of money. The smart thing to do would have been to sell the stock and just buy real estate when it was high, or pretty much sell with every vest, save up your cash, and then buy real estate.
I think it's a well said, Elder. Like, see, the same thing I was talking to one of the client also. This client in 2012, right? He had joined one startup company and it was the same thing. It was close to $200. He could have stayed back, keeping holding the stocks. He basically, what he did is like he sold all the stocks and some of the parts of the stocks. He bought a real estate investment in Santa Clara. Right now, you can compare the home prices. How is it in the Santa Clara right now? But the same stock, whatever you had kept on, right? Like it went to a company filed for a bankruptcy. So always it's a planning out stocks is always a luckier and how it goes in around, but strategies do the strategying is a better, right? Like strategize is a better. How do you split it out instead of keeping everything in one bucket? Split it into a different bucket so that way, if one goes down anytime, so others can give us a benefit.
Exactly, exactly. And I think it's important to stay diversified, right? So if you
Yeah.
want to stay in the stock market and you want to diversify your portfolio, we can help you with that. Like let's say you have 1 million, 2 or 3 million in RSUs and you want to slowly diversify, we can definitely help you diversify in a very tax efficient way to minimize your capital gains. And then also going back to real estate, I do think real estate is the safest asset. If you look historically, in the past 10, 20, 30 years, the average home price did not go down. The average rent price did not go down. They just keep on going up, up, and up with inflation.
Yeah, I think it's a well said inflation, right? The inflation from like I think not even to compare last 20 years, right? Go from 2008 itself, where the market crashed in 2008, and see the how the home prices have gone up from 2008, recovered back, and it went up so high. If somebody wants to buy $1 million, where is it in Santa Clara right now, or so anywhere in the Bay Area right now?
Definitely, definitely. Real estate over the long run will definitely make you money and make you wealthier.
Correct. So, listeners, myself, Realtor Nagaraj Annaiah, and I'm talking to the CPA Dude, and we're discussing about the tax saving strategies and what are the ways. If you have any questions, we have still live on Bali 92.3. Our studio line numbers are 877 Bali 92. Now, let's talk about where the not all income is equal, right? You said like earlier, like not all income is created equal. Can you explain how things like a dividends, rents, or a loan proceeds are taxed differently from a W 2?
Definitely, yeah. So I mean, W-2 income is really the worst income to make, right? That is taxed at the highest rate. You can't really offset W-2 income in an easy way. You have to buy real estate or do more creative strategies. Business income much easier to offset. And then if you're a real estate investor, your income is actually considered passive. It is not subject to payroll tax. So you're saving 15% right there. So as you're buying rentals over time, you're going to get much more money in rent. You'll start generating taxable rental income. But the benefit there is that there is no payroll tax. So that is very, very good. And then also the really the best income I would say
Let's
is
take up this
long-term
call.
capital.
Let's take up this call. Hi, welcome to your show. Your name, please.
Hello.
Yeah, hi, welcome to the show. Your name, please. Please go ahead with your question. Yeah, hi, Vikram. Please go
Yeah,
ahead.
my question is basically I have like a couple of state renters,
Uh-huh.
and me and my wife both are IT professionals.
Uh-huh.
I wanted to check how can I get the tax benefit of my rentals.
Got it. So Eldar, like, do you want to? His question is like there were two rental properties and both are IT professionals, husband and wife. They would like to see how they can tax leverages or reduce it.
Definitely, yeah. So I mean, if you have the ability to convert the properties to short-term rentals and maintain them as a short-term rental for a full 12 months, so the average stay must be 7 days or less for 12 months, have 100 hours of work, you can then bonus depreciate the property depending on the value. It'll give you a very, very good deduction against your W-2 income in 2025 or 2026, whenever you choose to do this.
Vikram, do you have any follow-up questions or like did you understand or like you have any questions on that?
Is it possible only with short-term rental? Is it not with the long-term rental?
No, but I think the beauty of that is if you have bought a duplex, or for example, one of the part of the bedroom also can be converted into a short-term rentals, right? That is all depends on you how you basically think about it or how do you plan for it, right, Elder, on that?
Yep, exactly.
Yeah, so not necessary to give the full house also. Even the part of the house can be short-term rental. That is where the expert, like when you sit with because I understand because Airbnbs might not work out always, right? Short-term rentals, but that is where the creativity comes in. How do you do it? Okay, so if
Yeah, one of it is a concept. It's a good idea.
Yeah, so it's for 1 year. Just for 1 year, you can do a depreciation, bonus depreciation. Then later you go back to the regular rentals. That's how it works out. Okay. If you have any questions or more on this, right, Vikram, do set up an appointment with an elder under the CPA Dude team. They're helping out a lot of customers, especially on the tax saving strategies, so that you can also get benefited. But if you have any questions on the real estate, you can always connect with me, Vikram.
Thank you so much.
Thank you, sir. Vikram, best of luck. So, Elder, if somebody wants to reach out to you on the tax saving related, how they can reach out to you?
Definitely, yeah. They can go to join.thecpadude.com. That's join.thecpadude.com. You'll fill out your basic information, and then you'll book a time to chat with one of our strategists. We'll learn more about you. You'll learn more about us, and we can see how we can help you out.
Yeah, and one more thing, it's an absolutely free session for the first time. It's absolutely free. Do utilize that services. Go, nothing will to lose. See, the CPA Dude can help you to strategize for you. Make it. I'm certainly sure they can help you to save your maybe other places you might be paying $1,000 or under $500, but you might pay a few $1,000 more with the CPA Dude, but you end up saving more lot of taxes. But do set up an appointment with me. But if you want to set up an appointment with me on anything on the Bay Area real estate, go to nagarajhomes.com and click on a WhatsApp icon. Easy way to connect. If you want to build your wealth, if you want to buy anything on the Bay Area real estate, always reach out to me. Thank you so much and have a wonderful day out. Thank you, Elder.
Thank you.